Did you know there are countries where you can legally live as a full-time resident and pay absolutely no local income tax on what you earn? Or that a few of them will hand you permanent residency for less than $500 in government fees? How about the fact that when you combine those zero tax systems with a special IRS provision called the Foreign Earned Income Exclusion, some Americans end up owing nearly nothing to the United States government either? Well, living abroad for tax reasons is not just for millionaires hiding money on a yacht. For a growing number of working Americans, remote workers, retirees, and self-employed people, the right move to the right country is quietly one of the most powerful legal tax strategies available. But here's the thing most people miss. The United States taxes its citizens on worldwide income, no matter where they live. So moving to a zero-tax country does not automatically wipe your IRS bill. What it can do is set you up to use two powerful tools: the Foreign Earned Income Exclusion, which lets you shield up to $130,000 of earned income from United States tax in 2025, or the Foreign Tax Credit, to dramatically reduce what you owe back home. So buckle up, because we are about to break down 7 countries where Americans can live as tax residents and pay zero local income tax. And by the end, you will know which one is the most practical for most Americans and why. First on the list is Malaysia. On paper, Malaysia looks like an expat paradise. The country runs a territorial tax system, which means income earned outside Malaysia is not subject to Malaysian tax. For years, that made it a quiet favorite among retirees and digital nomads who wanted a low-cost, English-friendly base in Southeast Asia. But starting in January 2024, Malaysia began taxing foreign source income remitted into the country, meaning money you bring into a Malaysian bank account from abroad. There is a transitional grace period through 2026 for most passive income. The trend is clear. The rules are tightening. If you bring pension money or investment income into a local account, you need to be careful. The Malaysia My Second Home program, known as MM2H, now comes in 3 tiers: silver, gold, and platinum. The silver tier offers a 5-year pass. The old steep income requirement is gone, which is a relief, but you do have to purchase property in Malaysia and hold it for at least 10 years. The minimum stay is 90 days a year. Malaysia and the United States have a tax treaty, which provides some double taxation protection. The cost of living is attractive. A comfortable lifestyle in Kuala Lumpur runs around $2,000 to $2,500 a month. The payoff for Malaysia? It still works as a low-tax base if you are careful about what income you bring on shore. But the shifting rules around foreign source income make it the most uncertain option on this list, and that is why it earns the bottom spot. Moving up the list, we come to the Bahamas. Zero income tax, no capital gains tax, no inheritance tax. The Bahamas is about as pure a tax-free jurisdiction as you will find anywhere on Earth, and it sits just 50 miles off the Florida coast. Here is the catch. Getting legal residency is expensive. The minimum investment for permanent residency is $1 million, a threshold raised from $750,000 at the start of 2025. That investment must be qualifying real estate held for at least 10 years. For Americans who can clear that bar, the math is genuinely powerful. If you are earning $1 million from a portfolio and living in Nassau, you owe no Bahamian income tax on any of it. Layer on the foreign earned income exclusion, $130,000 shielded from U.S. tax for 2025, and you have made a significant dent in your total bill. For income above the foreign earned income exclusion threshold, the IRS still taxes the excess, and since the Bahamas charges no tax, there is no foreign tax credit to offset it. High earners need to plan for that gap. Cost of living in the Bahamas runs higher than anywhere else on this list. A comfortable budget in Nassau is roughly $4,000 to $6,000 a month. The proximity to the United States, English-speaking culture, and complete absence of local income tax make it genuinely attractive for Americans with capital. The $1 million entry price is what keeps it from ranking higher. Our next stop is Costa Rica. It does not carry the reputation of a tax haven, but Costa Rica runs a clean territorial system. Only income earned within the country is taxed locally. If your paycheck comes from a foreign employer, your Social Security check arrives from Washington, or your investments sit in accounts abroad, Costa Rica does not touch it. The residency options are some of the most accessible on this list. The Pensionado visa requires a lifetime pension of at least $1,000 a month, and Social Security counts. The average American Social Security retirement benefit is around $1,900 a month, so most retirees already clear the bar. Once approved, spend 3 months a year in the country, and you are on track for permanent residency after 3 years. The Digital Nomad visa requires at least $3,000 a month in documented foreign income, or $4,000 a month for families. That gives remote workers a clear track without tying up capital in real estate. On the U.S. side, Costa Rica has no tax treaty with the United States, but that matters less than it sounds. Because Costa Rica taxes zero on your foreign income, there is nothing to credit against your IRS bill. You lean on the Foreign Earned Income Exclusion, or FEIE. Qualify through 330 days abroad or through genuine bona fide residency, and up to $130,000 of earned income is excluded from U.S. tax for 2025. A married couple where both spouses qualify can shield $260,000. Living costs in Costa Rica sit at a comfortable middle ground, around $2,000 to $3,000 a month for a good lifestyle on the Pacific Coast or in the Central Valley. Costa Rica earns its spot here for combining a well-established expat community, geographic closeness to the United States, and one of the lowest pension income bars on this list. Now we are getting near the top. Georgia, the country in the South Caucasus, not the American state, operates a territorial tax system. Georgian authorities tax only income earned inside Georgia. Dividends from American stocks, rental income from a property back home, and a salary from a foreign employer are not subject to Georgian income tax. The cost of living is startlingly low. A comfortable lifestyle in Tbilisi, including rent, food, utilities, and social life, runs somewhere around $800 to $1,200 a month. That is roughly a third of what you would spend in a mid-sized American city. Getting there legally is almost frictionless. United States citizens can enter and stay in Georgia for up to a full year without any visa. To formally become a tax resident, you must spend at least 183 days there in a 12-month period. There is also a high net worth individual track with no minimum stay, available if you earn roughly $93,000 annually or hold assets of at least $1 million. Here is the math moment. Say you are a freelancer earning $80,000 a year from foreign clients. Georgia charges nothing on that income. Then you qualify for the Foreign Earned Income Exclusion back home, $130,000 shielded. Your entire $80,000 is covered. Total tax bill, close to zero. That is exactly what the territorial system and the Foreign Earned Income Exclusion are designed to do together. The flat income tax rate in Georgia is 20%, but that applies only to income earned locally inside the country. Foreign income escapes it entirely. Georgia does not have a tax treaty with the United States. Outside Tbilisi, digital infrastructure and English proficiency are uneven. Banking takes patience for newcomers. It is a developing destination, and that reality comes with the package. Paraguay is one of the most underrated destinations on this entire list. It is the only country in South America that pairs a strict territorial tax system with one of the cheapest, most straightforward permanent residency programs in the world. Here is how the residency works. You fly to Asunción, gather a few documents, a clean criminal record, and a birth certificate, both properly certified, and pay a government fee of about $400. You receive temporary residency. After 3 years, you convert to permanent status. With permanent residency, you only need to visit Paraguay once every 3 years to keep it active. There is no minimum income requirement, no property purchase, and no job offer needed. That combination does not exist anywhere else on this list. On the tax side, Paraguay is pure territorial. Foreign income is not taxed. Your Social Security, your remote income, your investment dividends all face a Paraguayan tax rate of 0. No tax treaty with the United States means no foreign tax credit. But the FEIE, the Foreign Earned Income Exclusion, still applies to earned income. Up to $130,000 can be excluded from U.S. tax if you qualify. The cost of living in Asunción runs around $1,200 to $1,800 a month for a comfortable lifestyle. Paraguay does not have the infrastructure of Panama or Costa Rica. Healthcare, reliable internet, and government services require more patience. But for people whose priority is permanent residency at minimal cost combined with 0 local tax on foreign income, nothing else on this list gets close. Paraguay sits here because the lifestyle infrastructure is thinner than the 2 countries still ahead. The United Arab Emirates has no personal income tax, not low tax, not preferential rates. 0. The government funds itself primarily through oil revenues and a value-added tax on goods and services. So personal income, including salaries, freelance earnings, business revenue, and dividends, is simply not taxed at all. The residency options have expanded. The UAE Golden Visa is a 10-year renewable permit for investors, entrepreneurs, and skilled professionals. Real estate qualifying for the Golden Visa needs to be valued at 2 million dirhams, roughly $540,000. As of early 2026, the UAE removed the old 50% down payment requirement, so a financed property can qualify based on official land department valuation. You do not need $500,000 to get in. The UAE Green Visa is a 5-year residency for freelancers and skilled professionals. The Digital Nomad Visa offers a 1-year pass for remote workers earning at least $3,500 a month, with 6 consecutive months of bank statements. A standard employment visa works if you have a job with a UAE-based company. The critical tax picture: moving to Dubai does not erase your IRS obligation. You still file a return every year. But here is where the foreign earned income exclusion does its heaviest lifting. $130,000 of earned income is excluded from U.S. tax for 2025. If you are a remote worker or freelancer earning under that figure, combine the foreign earned income exclusion with zero tax in the UAE, and your total bill on earned income can reach near zero. Above that threshold, the U.S. taxes the excess, and since the UAE charges nothing, there is no foreign tax credit to offset it. High earners need specific planning for that gap. The UAE earns the second spot because it offers world-class infrastructure, international connectivity, and a strong business environment. The trade-off is a cost of living that reflects it. Rent in Dubai runs roughly $2,000 to $4,000 a month for a comfortable apartment. It is an exceptional setup for high earners. It is a harder sell for those on a modest income. Which brings us to the final country, and the one most expat advisors and Americans who have made the move tend to rank first. Panama has been drawing American expats since the 1980s. It runs a clean territorial tax system. Only income earned inside Panama is taxed locally. Foreign income of any kind, from pensions to Social Security to dividends to remote salaries, is not touched. And uniquely on this list, Panama uses the United States dollar as its official currency. No exchange rate risk, no conversion math. What you earn in dollars stays in dollars. The Pensionado Visa is the best retirement visa in the Western Hemisphere. The income requirement is $1,000 a month from a guaranteed lifetime source. Social Security qualifies. A pension qualifies. The average Social Security retirement benefit is around $1,900 a month, nearly double what the Pensionado requires. Panamanian law mandates discounts of 15 to 50% on airline tickets, hotels, restaurants, and healthcare for pensionado holders. These are not optional perks. They are written into the law. For earners and remote workers, the Digital Nomad Visa requires $3,600 a month in documented foreign income, about $43,000 a year, and gives a 9-month initial stay with renewal options. After 5 years of legal residency, you can apply for permanent status. Here is the full tax picture. Panama taxes zero on your foreign income. The United States taxes your worldwide income, the foreign earned income. Exclusion covers up to $130,000 of earned income for 2025. Establish bona fide residency, live in Panama as a legal resident for a full tax year, and that exclusion wipes the IRS bill on earned income below the threshold. What about retirees living on Social Security and pension? Those are not earned income in the IRS sense, so the foreign earned income exclusion does not apply to them directly. Panama taxes none of that locally. The United States taxes Social Security on a sliding scale based on combined income. A retiree living modestly in Panama with Social Security as their main income and low overall expenses may find their U.S. bill is already very small without any special planning at all. Cost of living in Panama City runs about $2,200 to $3,000 a month for a comfortable lifestyle. In smaller towns like Boquete, one of the most well-known retirement destinations in the world, you can live very well on $1,500 a month or less. Panama earns the top spot because it stacks more advantages for more types of Americans than any other country on this list. The Pensionado visa has the lowest documented income requirement relative to what most retirees already receive. The dollar currency removes a layer of financial complexity. The territorial system is clean and well established with decades of expat history. The infrastructure is first world by regional standards, and the foreign earned income exclusion layers on top to eliminate U.S. tax on earned income as well. Here is the honest close. The framework is real. Territorial tax systems exist. The foreign earned income exclusion has been part of the Internal Revenue Code for decades, specifically designed for Americans living abroad. Zero local tax combined with the exclusion can dramatically reduce or nearly eliminate the total tax burden for Americans overseas. That is not a fantasy. It is how the rules actually work. But moving abroad does not mean disappearing from the IRS. You still file a return every year. If your foreign accounts hold more than $10,000 at any point in the year, you must file the Foreign Bank Account Report by April 15th. Larger foreign asset holdings may trigger FATCA reporting too, and your state of domicile back home may still want a piece of you if you do not cut ties cleanly. Every situation is different. Your income sources, your assets, your family situation, and your state residency all change the calculation. The 7 countries on this list are genuinely worth exploring. But before you book a flight and open a foreign bank account, sit down with a tax professional who specializes in expat law. That one conversation could save you far more than the plane ticket costs.